It spends on AI and then it makes money.
Get ready, another earnings season starts this week, and strong performance is leading to even higher expectations.
It's definitely set up to move higher with a good report.
MarketBeat's Thomas Hughes shares a list of 3 stocks he believes investors should load up on now before earnings are released.
Could potentially rise $20 to $30 within the next couple of weeks.
His picks come from every sector, but these stocks do have one thing in common, and that's a strong expectation ahead. Let's dive in. Thomas, so great to have you back on the show as earnings week is here now, just a couple of days away from the start of earnings season.
Yeah, right. It starts this week on Tuesday. Well, the reporting season's already begun. Peak season starts this week on Tuesday with JP Morgan and the big banks. We'll get a few reports on Tuesday, a few on Wednesday and Thursday. We'll get a host of regional banks throughout the week and quite a few other large S&P 500 names. So it should be a pretty good week as far as earnings goes.
For new investors who are just kind of starting their investing journey themselves, what can you expect during earnings season for stocks? Do we usually see a little boost? Do we maybe see a pullback? What kind of anticipation do we usually see in stock prices leading up to earnings?
Well, it really depends on a lot of market dynamics. Right now, what we're expecting is to see some outperformance. The outlook, the consensus for the quarter is about 5% growth, but it has been drastically reduced since the first part of the year because of all the tariff fears. What I have to say about that is the impact of tariffs have not yet been fully felt in the economy. So all of these estimates for Q2 based on tariff impacts have been reduced far too low. We should expect to see outperformance. Q1 outperformance was close to 100%. The index was forecast to grow earnings by about 5 or 6% at the start of the quarter, ended up with about 10% at the end of the quarter. So that was a pretty big amount of outperformance. Expect to see that again. How that impacts stock prices is kind of questionable because the guidance could also be impacted. We still do have tariffs on the horizon. That tariff threat has been escalated over the last week. It's possible that the guidance could be poor relative to how the outlook is. In that scenario, I would expect to see most stocks move lower and the S&P 500 to follow it.
Yeah, there's a lot riding on this earnings season for sure. I like that first prediction you have of outperformance being the name of earnings season this year. We hope that's the case. But let's get right into this list that you have to talk about. And that's the question everyone has before earnings season. And that's which stocks to load up on before earnings season hits, because we're expecting a boost in the stock after this earnings report. So,
Right.
what's that first company on your list?
Well, right. So all the names on this list I got off of MarketBeat's list of most upgraded stocks. They're not the one, two, and three ranking on the list. Just some interesting names that I pulled up. Also have good chart action and pretty nice expectations for earnings and for the next couple of quarters. But that first one is Meta Platforms. The story with Meta Platforms right now is that it's been poaching talent for its AI pool. Uh, so the trend with Meta over the last couple of years is it spends on AI and then it makes money. It spends and makes money, spends and makes money. So right now, this spending just looks like Meta is investing even more in its AI, which has been really driving results both internally for operations and with the operations, the performance of its platforms and its ad business. The analysts are raising their targets. They're affirming their sentiment. They're leading the stock to new highs based on the current estimate trend. Meta could rise by another 25%.
Yeah, that's a really good upside for such a large company out there. Have we seen that uptrend already start just heading into earnings?
Right, it has been. Meta's been rebounding since April, just like all the rest of the market. I think in this past week, 2 weeks ago, it tickled a new high, pulled back a little bit this past week, still showing pretty strong support above critical moving averages. Is definitely set up to move higher with a good report. The analysts are leading it that direction. So, provided we don't have any bad surprises, I would expect to see Meta moving to new highs next week and the week after.
Let's talk about last earnings season a little bit. How did Meta do the last quarter? I know one thing we talked about was adding in the Meta glasses. How did that sector perform for Meta last quarter? And are we expecting that to really show up in earnings this quarter?
The virtual reality glasses with Ray-Ban have been helping Meta, been driving results, been driving profitability. The last report included significant outperformance on both the top and the bottom line, sustained double-digit growth. The news since then is that Meta and the glasses producer is expanding partnerships with other manufacturers to expand the virtual reality glasses to Oakley and to other glass manufacturers, expanding that business. It is expected to be a significant driver of revenue growth for Meta over the next few years, and that's only one product. As I was saying before, they're poaching talent for their AI pool. They're trying to advance AI technologies across the stack, front, back, software, and hardware. So I really am expecting to see a lot of really good, big things from Meta over the next couple of years.
Yeah, certainly a lot of developments happening at Meta right now and also impacting the companies that are involved with those new developments too. You can check out a free list of other stocks that are benefiting right alongside the metaverse. It's all in this free premium report on marketbeat.com right now. You just have to scan this QR code or click the link that we have for you right in the description of this video to get that free report right now and check out the other stocks that are benefiting right alongside Meta. Let's get on to that second company on your list, a little less of a well-known name or at least a much smaller company.
Oh, it's a lot less exciting of a company. That's Dollar General. This is consumer name, a retail stock. It had been suffering for almost 2 years in the post-COVID market normalization. It also had struggled with business size and some rationalization needs. So the story this year is that it is turning around its business. It's rationalizing its footprint. It's investing in profitable growth. The last earnings report showed some significant traction as far as that goes, and management had stated intention to accelerate those efforts. So analysts are raising their price targets. They're leading this market into a reversal. Right now, I'm looking at the chart. What I'm seeing is a bull flag. Provided we get a good report, which is what we're all expecting to see, this market should confirm that flag, could potentially rise $20 to $30 within the next couple of weeks. But in that scenario, we enter a full reversal. And in that scenario, this market could continue to trend higher over the next couple of years as it leans on its turnaround, improves its margin, improves its revenue, and really builds some value for shareholders.
I want to dive into that turnaround a little bit. What could be fueling it? Why did we see the downtrend and now seeing this really bullish movement for Dollar General?
Well, right. So there was a lot of problem with inventory and with slippage and just with generally sluggish sales and with too much inventory, too many stores, messy store layouts. The company was really just was hurting itself. So what it's been doing is trimming out underperforming locations, leaning into better performing locations, remodeling stores, modernizing, trimming inventory, generally making it more appealing and easier for its customers to come and get the merchandise.
Little changes make a big difference in the retail sector for sure. I do want to talk a little bit about retail in general. When we talk about a stock like Dollar General, it's, I think, important to talk about the whole retail sector and how that's been performing in the market. Is retail seeing the same kind of lift the rest of the market is seeing this summer?
Retailers have seen a rebound this summer. Generally speaking, though, the retail industry has got some headwinds with consumers shifting down. Dollar General is benefiting from that because shoppers that tend to go to higher price point stores are going to Dollar General and to lower price point stores. Um, the last couple of months, sequentially, retail sales have kind of been slipping with consumers being cautious, but spending is still pretty strong compared to last year. So we have a little bit of near-term weakness offset with long-term strength. Upcoming earnings season, I would expect to see the leaders continue to lead. Names like Walmart, Costco, the TJX companies, BJ's Wholesale Club will continue to produce industry-leading results, strong margins, and then names like Target and others that have been struggling will probably continue to lose market share.
That's a good look at the retail sector. So we've had AI, we've had retail. What's that third company on your list of stocks to load up on before earnings?
Well, that's Wingstop. Wingstop has headwinds this year. Its comp store growth has been pretty tepid. Consumers are definitely pulling back, but it has been leaning hard into store count growth. Store count growth is sustaining a high double-digit growth pace. It's focusing more on its international growth, which is going to help accelerate and even to help sustain that double-digit growth pace into the future. The analysts really like what they've been seeing in their results and with the company's leverage. It's also able to maintain a really healthy balance sheet and some strong capital returns, which is also helping to support the stock price. Right now, the analyst trends are leading this stock into about a 30% gain from the pre-earnings release price action. So all it's going to take is another good report affirming this outlook, affirming the growth strategy and its profitability.
Yeah, that's funny you talk about one of the factors being growth. I know Wingstop added another location in our fairly small town here in South Dakota. So interesting to see that that's played a factor in their strategy for growth. It's just adding more stores. I think let's talk about the restaurant sector as well. What are we seeing in that industry right now in the market? Are we seeing restaurant stocks performing well? Are we seeing these more fast casual restaurants like Wingstop maybe doing better than some of the other restaurant brands out there?
Generally speaking, the restaurant industry is not robust right now, but the names that I follow tend to be growing. Darden Restaurants is doing fairly well. They've been leaning into some growth efforts and some margin enhancing efforts. Texas Roadhouse is the industry leader. It's been growing. Cracker Barrel has also emerged from its post-COVID normalization period, has returned to growth. So generally speaking, not robust, but still doing pretty well. A lot of these stocks also pay nice dividends and return capital in other ways. So ultimately are pretty good investments for long-term investors.
I want to look at their earnings from last quarter too. Was the growth already starting for Wingstop last quarter? And what are analysts saying about growth for this season?
Well, so last quarter growth slowed to 17%. So that was a pretty big slowdown sequentially, about 1,000 basis points. Also from the previous year, about a 50% reduction in the growth pace, but still a very solid growth with, as I said, the store count offsetting comp store weakness. But looking forward, the company is expecting to continue aggressively building its store count. Comp store gains are supposed to improve over the next year. Analysts are like what they see in the report and the trends. And as I said, they've been lifting their targets, lifting their sentiments, and leading this market into a reversal.
What's that upside prediction for Wingstop?
Right. So right now at the high end range, we're looking at about a 30% upside, which would be sufficient for a new all-time high.
There could be some moves in this one for sure. We will keep an eye on that one in earnings season and the names that you shared with us today. Let us know which companies you are looking forward to watching this earnings season. That could be really big names. We will cover all of the big earnings moves right here on Market Beat. Thanks again for watching, everyone. Again, let us know what stocks you want to follow this earnings season in the comments. We'd love to hear from you. Thanks again for watching, and as always, happy investing.